What's up everyone, it's Scotty with Money Investing. So thank you so much for joining for yet another Market Open live stream. I have been out the entire day for the last like 8 to 10 hours, so I am incredibly exhausted right now, but we will do this. The markets are green. We're seeing a little bit of recovery right now with the Nasdaq ETF jumping over 30 basis points. Pre-market, we got the SPY ETF up over 36 basis points and the Dow also pushing higher over 36 basis points on the day. There were several headlines that kind of caught my attention today, so I'm going to break that down very quickly. So Yellen sees inflation staying higher for next several months. It was mostly Janet Yellen, who's the Treasury Secretary, basically coming out with two headlines that were very, very important. So Treasury Secretary Janet Yellen cautioned Tuesday that inflationary pressures hitting the U.S. economy could last for a while, and coming less than a week after Federal Reserve Chairman Jerome Powell called inflation quote-unquote frustrating. And Yellen told CNBC that various issues that have colluded to push prices higher likely will pass, though, and she's not sure how long that will take. Supply bottlenecks have developed that have caused inflation, and I believe that they're transitory, but that doesn't mean they'll go away over the next several months. She says that, and I quote, "I trust the Fed to make the right decisions. We have been hit by an incredibly unusual shock, and on the one hand, we're almost 6 million jobs short of where we were during the pandemic, which means a lot of people are looking for work. They're looking for jobs. On the other hand, many firms are finding it difficult to hire." So we're kind of like in this unusual economy right now. Of course, here's some stocks here. Lordstown Motor down about 6.8% after Morgan Stanley downgraded the stock from equal weight to underweight, basically saying that Lordstown's Ohio plant to Foxconn values a plant at less than a fifth of prior estimates. Ocugen, the developer of gene therapy treatments, soared at 10% pre-market after it announced joint development and supply agreements involving the vaccine candidate and its treatment for dry age-related macular degeneration. So that was quite a bit of a move here on Ocugen. Let's take a quick look. So we are up a little bit over 6% right now, but for the most part, this stock has just been consolidating sideways and just trading in that range. Moving forward, Facebook staged a modest rebound following a nearly 5% drop on Monday, rising 1.1% pre-market today, and Monday's decline came in the wake of the 60 minutes whistleblower report. So we broke this down earlier in our yesterday's live stream, and of course Facebook had a really brutal sell-off. It was down all the way to those of $320, roughly $322. We ended up actually buying a little bit of Facebook yesterday, just starting a very small position. I do believe that it's very oversold. It's coming down quite a bit. I mean, it's down over 15% from its all-time highs. So just about 15% from its all-time highs. I don't think the weakness is over yet. We're not in the clear, of course. There's no trend reversal, but I think it's a reasonable place to start a small position. If you do come down to $315 and $300, in my opinion, that's going to be a very, very nice opportunity to kind of buy a really good sort of fundamentally sound company at a very low valuation, reasonable price as well. And there was also apparently a 6-hour outage that impacted all Facebook services. I'm surprised that I'm reading about this and I didn't even notice at all. Like, 6 hours is a pretty long time to not have access to Instagram, WhatsApp, and Facebook. I don't know how many of you guys actually noticed it, but I did not. But that was a pretty long time to just not have those three services. For individuals, for businesses, of course. So that was a long time. Johnson & Johnson, this company that I'm definitely watching here. Because you were sleeping? No, maybe I don't know. Was I sleeping? When was the 6 hour? When did this happen? So I don't know if this was Nelson says he was an Instagram gym. My kid lost his mind. Interesting, because I'm actually proud to not have noticed that Instagram was down. That means I'm not using it a lot. That's good. But Johnson & Johnson, this is a company that I'm definitely watching. Had an application with the FDA administration for emergency use authorization. This stock has definitely come down a lot. I mean, it's got a decent yield. We got 2%, 2.5% yield here, 2.6% now, and this stock is obviously down over 10% from its all-time high. So definitely on my watch list for a potential buy here as we breach that 200 SMA and come down even further. So all right, let's see. All right, Caddy, do you think the bump pre-market will hold? I personally don't think it will. I'm just a little bit cautious here. That's why I'm very, very conservative in the markets, and I don't think we're clear we're not clear of the woods yet. I could still see like a nice 10-12% correction here. on the S&P 500, as I've mentioned, down to 4,100. That's the 200 SMA that I'm watching very closely. Aaron, welcome on board. Thank you so much for joining. So that would be like 4,100 on the S&P, down about, down to that 200 simple moving average. And for the NASDAQ, that is also going to be a retest of that 200 SMA roughly at the 14,000 points level. And make sure that you guys understand the 7 risks that we've talked about on the markets, right? There's going to be plenty of them. But let's just quickly go over this. Oil is one thing that just keeps pushing higher. I broke this down in our yesterday's live stream, and it was absolutely incredible to watch oil just hit, multi-year highs. And here we are with crude, another 1.3% jump. And Brent is as high as $82 a barrel. I mean, this is insane. And you know what? OPEC Plus doesn't want to raise supply. It's crazy. So OPEC resists calls to ramp up supply. There was an OPEC Plus meeting, which is basically OPEC countries plus Russia and some other countries as well. So they said Monday that it would stick to its existing pact of a gradual increase in oil supply. So let's just read this. Oil prices climbed to a multi-year highs shortly after a group, some of the world's most powerful oil producers, opted against a big supply boost, and now energy analysts believe crude prices could possibly go to as $100 a barrel. OPEC and non-OPEC partners, a group collectively referred to as OPEC Plus, said Monday that it would stick to its existing pact of gradual increases in oil. And OPEC Plus said that it had reconfirmed the production adjustment plan in a statement published online shortly after relatively swift ministerial talks. And this referred to its previously agreed decision to add 400,000 barrels per day to the market for the month of November. Yeah, it's a supply issue, and actually demand is going to pick up as well. So we'll read that further. But you'll notice that the move came amid concerns that rising inflation could derail the economic recovery from the pandemic. And India, another big oil consumer, has also pushed for OPEC to consider more supply to ensure prices suit both producers and consumers. And OPEC Plus to return supply to the market more rapidly. We think that their refusal to do so means that the market will remain in deficit in Q4, which suggests that oil prices will remain elevated for at least the remainder of this year. So one of the things that OPEC Plus also mentioned, and their own data shows, that demand will outstrip supply in Q4. As a result, oil could possibly, retest highs of $90 to $100 a barrel. That would be absolutely astronomical. It's going to put a lot of pressure on inflation, and that's why I'm a little bit concerned about future inflation readings that are coming out. One's coming out next week, October 13th, and then November, December for previous months as well. So, that is going to be, we'll see what those inflation readings look like. But U.S. faces a recession if Congress doesn't address the debt limit within 2 weeks. Janet Yellen, once again with the headline news here, saying that on Tuesday, she believes the economy would fall into a recession if Congress fails to address the borrowing limit before an unprecedented default on the U.S. debt. I do regard October 18th as a deadline. It would be catastrophic to not pay the government bills, for us to be in a position where we lack the resources to pay the government's bills. And President Joe Biden on Monday called the Congress to raise the debt limit this week and avoid even approaching near to certain economic turmoil. I fully expect, and she basically says this, and I quote, I fully expect it will cause a recession as well. While the U.S. has never failed to pay off its bills, economists say a default would spark widespread damage through a jump in interest rates, tarnish faith in Washington's ability to honor its future obligations on time, and potentially delay Social Security checks to some 50 million seniors. This, to me, for the most part, is noise. I don't expect a recession here. The U.S. has never defaulted on its debt. This has happened time and time again. This is a drama that we go through every year, and they end up either raising the debt limit or suspending it altogether. Last time we had from Trump, and it was suspended up until this year. But I don't personally see that being a big issue. Of course, it's going to get a lot of headline, a lot of attention, but I do expect something to get resolved before October 18 deadline, and for Congress to work together and figure this out. So that's that. I'm more concerned about oil than I am about debt ceiling because that's going to put a dampen on inflation. As a result, 10-year yields are already higher today. So, we're up another 1.5%, back up to over 1.505. And then, of course, we got the employment report coming out this Friday, and then the actual inflation numbers coming out October 13th. So Caddy, why do some companies not have a P ratio such as Uber? So Ryan, that's a great question. So P is simply the price to earnings. So earnings is going to be the actual EPS. That's the earnings per share. Some companies are not profitable yet. So for those companies that don't generate an EPS, earnings per share, that don't generate a net income or are not profitable, you won't have a price to earnings for those companies. So instead what we look at enterprise value to EBITDA. If the company actually does generate any positive EBITDA, that's earnings before interest taxes are taken out. Or we also look at price to cash flow. If the company actually generates a positive cash flow, if we don't have any of those, then we kind of resort to price of sales because the company is at least generating some sales, at least generating some revenue. So you can actually take a look at the valuation based on that. So that's that. Let's see. Crowdstrike by when? 170. Let's take a quick look, and then I'll go over to some of the questions as well. So Crowdstrike, 227 is kind of like that next support I'm watching. Yesterday down about 4%. Crowdstrike also is like a rich stock, trades at a very high valuation, and also is a growth stock, right? I would consider Crowdstrike as a growth stock, but 227 is that next support level to watch, kind of aligned with that 200 simple moving average. And of course, the resistance is going to stay put at close to this level at $250 a share. But again, still trading at a rich valuation. I would love to get CrowdStrike closer to 160s and 170s. I think this is a part of our watch list. And by the way, we added a new benefit to all of our Patreon members. So this is a new tracker spreadsheet that I've created for all of our members that can be accessed anytime. So really what it's doing is that it's going over all these different stocks that we've added to the list. So we've got all the blue chips here. I don't know what happened. So there we go. Yeah, so we got all the blue chips here. So data is loading probably because the markets are about to open. But it goes over all the valuation multiples for these companies as well, right? So we got all the 4 valuation multiples that we're going to track on a regular basis for these companies. And really gives us a good understanding on what's trading at a fair value versus undervalued versus overvalued for all these companies. So we'll continue to kind of monitor this on a regular basis to really understand, whether there's opportunity to get in on some of these stocks, whether dollar cost average, where to buy, how much to buy. Questions like those, will be helpful if we have these valuations with us, and they will update automatically based on the EPS changes, based on the price. Of course, price changes market cap changes everything, all the valuations for these companies. All right, the markets are open. So let's just quickly go over to the actual NASDAQ here. We're gonna go over to the S&P over here and the Dow Jones on this chart. So far, green open, modest green open here for the markets, 40 basis points for the NASDAQ. We got about 40 basis points for the S&P, and the Dow also up over 40 basis points. So not a huge sort of rally from yesterday's sell-off, but we are starting off the day with a reasonable green on the screen. With the VIX down about 2.6% here, coming down to 22.35. And let's just quickly go over to our 4-minute charts here, 5-minute charts, to go over some individual stocks as well. What do you guys think? Are we going to turn red, or are we going to stay green and actually close green? What do you guys think? Let me know in the live chat what everybody thinks about the market today. All right, let's just put Tesla here, Amazon, Apple. Let's just put BABA also, because I'm interested in BABA. 52-week lows here, $139. Tesla still struggling at closer to $800. Yesterday's high was 806 something, and of course the support is at 780. So low for the day 782, and right now we're just validating $708 perfectly over there. And then Alibaba also kind of bouncing higher a little bit, still flat on the day. And we got Amazon also up today, with Apple back up to over 140. A lot of buyers kind of stepping in. So Nasdaq definitely seeing a little bit of a momentum here. We'll see how long does this last for. And then let's just quickly go over some of, and Bitcoin also almost breaching 50,000, right? So 49,986, breaking out over this sort of resistance pattern at close to 48,500. So we were consolidating, right at that level before breaking out to the upside. Next resistance I'm watching is at 53,000 roughly, 52,944, like aligned with this red line you guys see on the chart. And then Ethereum also is going to be sitting roughly at this 3450 to 3500 level. So this right here is the red line. That's going to be right there, consolidation pattern. Bitcoin actually broke out, but Ethereum is still consolidating sideways at the moment. Also keeping a close eye on this chart, relative performance chart. I talked about it in our yesterday's market update in quite detail. So definitely, would watch this very closely. In my opinion, we could see a little bit of a, first 15, 20 minutes, 30 minutes, the first hour, or at least the first half of the day, we could see some buyers step in. But I'm still not too confident with where we are with the markets because there's still some uncertainty when it comes to the employment report that comes out this Friday, and that's going to really dictate this employment report. So this jobs day on Friday is probably going to be the most important jobs day for 2021. Because that's really going to dictate when tapering begins. If we actually come in with a very strong number, anything over 350,000, 400,000 jobs added in the month of August, I would not be surprised. Actually, month of September, because we're reporting for the previous month. Month of September, I would not be surprised for Jerome Powell to come out in November and just tell us that we're beginning to taper and we're going to pull back on quantitative easing, and then we are going to potentially start raising rates after that. So we still have 7 to 8 months of tapering, but depending on the speed of tapering, really interested to find out how the yields react to that news. Couple predictions from Wall Street right now is oil hitting almost $90 to $100. Goldman has a price target of 90, I believe. Bank of America has a price target of $100 a barrel. And then for 10-year yields, there are many analysts who think that 10-year yields are going to tap out at 1.75 to as high as 2%. So those right there are two big calls on both 10-year yields and oil. If those two actually end up being true, man, tech is going to be a lot under pressure. Growth and tech are just gonna, in the short term, of course, they're gonna see a lot of pressure, just like what we saw yesterday, right? And yesterday was just like the tip of the iceberg. If the yields continue to push higher, if inflation comes in very, very hot, then Fed is gonna be under pressure to raise rates sooner than anticipated. All right, let's take a look. Were there any positive catalysts today? Just joining. Not that I know of. For the broader markets, there weren't any sort of like any reports that came out. Today is what, Tuesday? So yeah, nothing crazy. But for the most part, we still have, Alibaba. Look at that pump on Alibaba, $140.64. And Tesla's still struggling a little bit, and then we got Amazon also, just slightly up, pretty much flat on the day, and Apple also flat. Let's take a quick look on our main watch list, and then we'll quickly go over, I'll go over Amgn as well for the stock, for the analysis. But we got Roblox down, Astrospace down, Fiverr pulling back to 172. Fiverr's been really volatile lately. We saw that stock back up to 210, then back down to 180, then up to 190. Now we're at 173, so it's just been back and forth quite a bit. Foot Locker down about 1% here, trading just at $46. We got Caterpillar down to 191. Pretty much flat for the most part. We got LUV, Southwest just under $55, trading almost exactly at the level, so we're pretty much flat on the day. Yesterday it had a really nice day after the upgrade, but then we got Peloton flat, Corsair Gaming's flat, we got Pinterest slightly up over 0.5%, Walgreens is flat, PayPal, Visa, then we got Plug Power and Face pushing higher, 74 basis points, Vertex is up over 40 basis points. Let's see, Square pushing higher. Square had a brutal day yesterday, right? Definitely, big sell-off on Square. I think it was down a little bit over 4 or 5%. But Google, Apple, flat. Amazon just over 90 basis points. And NEO is also up close to 1% here. $34, that's the resistance to watch, at least near term. And there goes our power. I do apologize for that because it's about to rain here very soon. So there's another storm coming. So we don't have power. But Upstart is up. Yes, Upstart is up over 3%, almost at $300 again. So again, this was a growth stock that took a beating yesterday. So it was down close to, I believe it was down over 4 or 5%. So, all right. So Amazon, Baba, nice rally in Baba today so far, 1%. Tesla also pushing higher. And we got the 10-year yields also at a size 1.75. So what do you do in a market like this if you're out of cash would be interesting to hear. It's interesting because, well, if you're out of cash, there's not a whole lot that you can buy, obviously, because you don't have buying power. But for the most part, I would kind of look into if there's any rebalancing that you can do in the portfolio. If you're exposed to a certain stock by a lot, then you can kind of look into that to see if you can consider trimming some. And for the most part, there's only a couple different things you can do, right? You can just hold and observe the markets, or you can start to kind of reevaluate, which companies you have, where's your allocation for specific stocks, and if you want to trim certain positions to raise more buying power and reduce some exposure and some risk in certain stocks. So, that would be a couple different ways you can kind of monitor your portfolio. But of course, if you're out of buying power altogether, there's not a lot of buying that you can actually do. So. And yes, that's what margin is for. But margin, just be very careful because you wanna buy with margin, at least in my opinion, when you've got strong cash flow month over month to pay down the margin debt in case the market turns on you. Because every month nobody knows where the market's gonna go. But if it does start to pull back, you don't want to get into a situation where you're just you have a very borderline margin call situation, right? You want to have a lot of room for even if the markets do come down and you see like a 10%, 12% correction, you're in a good spot to not have a margin call, so to speak. So just be careful with how you use margin. All right, so for the most part, growth kind of rebounding a little bit. Let's take a look at banks. So we got almost all banks up, with PayPal, Visa, MasterCard once again turning red here. So there we go. There is a little bit of downturn here. The Nasdaq just pushed up, got up to that's 14,350, and right now we're back down, pulling just down to 14,300. S&P Dow also starting to pull back here. That's why, it's a little bit choppiness here. We're not seeing a lot of buyers step in. We're seeing more consolidation pattern, and that's what we saw towards the last 30 minutes to an hour. Actually, not even. We saw that for the last 4 hours yesterday. It was just like a lot of consolidation. Most of the selling took place in the first 3 hours, so 9:30 all the way to like 10:55, 11 a.m. So this right here was most of that selling, and then a lot of consolidation sideways, just back and forth. It's kind of like a boring day, rest of the day yesterday. So today we'll see what happens. Again, like I said, I'm not too confident in seeing any type of a trend reversal, so I wouldn't be surprised to see some more continuation to the downside here. All right, let's see. Jason says go to work if you're out of cash. That's good. I like that. All right, any stocks that we can go over? But in my opinion, as we already talked about in our Discord, I personally don't like to be ever all in the markets. Like, even if I'm very, very aggressively buying, I at least keep like 4 to 5% cash on the portfolio. Right now it's a little bit higher. Right now it's come down to maybe 17, 18%, but I like to keep at least minimum 5%. So my 0% for me is like my 5%. So I never like really go all in the markets, because anything can happen at any time. You can, just when you think the stocks can't possibly go any lower, they can go lower. They can certainly go lower. And this is, Peter Lynch said this once, and it always reminded me, because he said, when clients used to come to him and tell him that if I invest $1,000 in that stock, for like $2 or something, it's trading at a very, very low, cheap number, like it was a penny stock or $2 or $3. The client used to tell him that it can't possibly go any lower, right? It's at $2. How much lower can it go? And he used to tell his clients always that it can always go lower from where you bought it, right? So you always have to price in the risk and understand that there is downside risk with every investment that you make. All right, Palantir getting a little bit of a bounce back higher here, up over 2%. So not quite seeing that continuation from yesterday, but the RSI is oversold. The MACD has definitely come down a lot. So it's only normal for us to see some buyers step in here. The volume is still low here. So just about 4 million traded so far. But next resistance, of course, is going to be aligned with all these moving averages sitting perfectly with 25.75. So that right there is going to be that resistance level, and the support level is going to stay put at $21 a share. Right now we're just seeing some buyers step in for Palantir after this 20% sellout that we have seen, 21% pullback that we have seen for Palantir. So DG, do you think it's too early to dip into DOCN? What is DOCN? Digital, $80 Digital Ocean Holdings. So I'm not too familiar with this company. Seems like the revenues have been growing very, very good. Doesn't have any statistics or any sort of valuations. So not sure. Is this a company that's bringing another company public? Is this like a SPAC, or is this? Let's see. Operates as a holding company with interest in providing cloud infrastructure solutions, including website hosting, web and mobile apps. Okay, so it's actually a VPN cloud hosting tech company. So margins should be very high. Let's take a quick look. So gross margins 58%, not the best, but decent. EBITDA at over 18% margin. So let's see, income statement. Do we have EBITDA here? Yes, we do. So 60 million EBITDA. Do we have the enterprise value? Does TradingView actually calculate that? Let me see. It doesn't. So let me just do that through the market cap. So 60 million, and we got the market cap at over 8 billion. Oof, that's really high. So yeah, that's if you were to do some very quick math here. So that is trading at over 100 times EBITDA. at the moment right now. So incredibly rich valuation for the company. So, but of course it's rallied quite a bit, 78, 79%. I would watch that 50 EMA, so roughly at $68 per share for DOCN. You know, that would be a decent technical support, but fundamentally it's significantly overvalued at the moment. Let's take a look at AMGN. I know that somebody was talking about that one. So this one's definitely come down quite a bit, and let's see. So 3.2% yield, stable revenues, 21 times earnings, 4 times sales, so very low valuation as well. And this one has been consolidating sideways for a really long time. From 260, we're down about 19-20%. So this is definitely on the watch. I do have some analysis on here that means that we are, you know, very oversold from a weekly standpoint. So you'll notice the RSI has come down, the MACD's also come down substantially, and we are testing that 200 simple moving average on the weekly chart. So you'll notice that every time, literally every time the stock is validated that 200 SMA, if it bounced back higher. The last 3 times, actually 4 times, actually 5 times we validated that level. Once, twice, 3, 4, 5. We have bounced back higher from that 200 simple moving average. So this is definitely a stock that needs to be on the watch list right now for a potential rally back higher, because the valuation's good, the dividend yield is great, revenues are stable, profitable company, and it's down after a triple top about 18-19%. So I will definitely be watching this, and we'll probably share this idea with our Patreon members as well. Yes, AMGN is last. Going over this, let's take a look at Facebook and how the stock is doing today. So we are up just over 77 basis points. 315 on the weekly chart is going to be that 50 EMA, but 315 is also that 200 SMA on the daily chart. So both of them are support. $350 perhaps the strongest support level, and the low for the day, 326. So we almost come down. Let's see, $325 here before validating the support and pushing higher. So buyers really stepping in. So Baba up, Tesla back up to 790 here, so pushing higher. We got Apple just flat, consolidating. Amazon also flat, just consolidating. Let's take a look at Target. So Target, this right here was a trend reversal for the stock once we broke down below that 50 EMA. So far we are down a little bit over 15%. I would watch that 200 simple moving average at $217 very closely for the stock. So that right there would be that support level to watch. Yes, so Argel, is that how you say it? I'm sorry if I mispronounced your name. I will give you a shout out on Discord for AMGN. But yeah, it's lining, it's gearing up for a nice swing trading idea here for the company. All right, so overall, you know, pretty green so far, right? I mean, the buyers stepped in again, and we're starting to see a little bit of a push higher on the Nasdaq and the S&P and the Dow. Oil still continues to push higher over $82 a barrel. VIX slightly coming down. Let's just take a look at our select sector index. So this one, and we'll go over which sectors are actually doing well versus which ones aren't. So energy, of course, energy is another leader on the day without a doubt, along with the 10-year yields and the financials. So those 3 things have been kind of like the theme of this week and this past week as well. So energy pushing higher, taking energy stocks with them, yields pushing higher, taking banking stocks with them, and then we got all the other sectors kind of back and forth here, with tech pretty much flat, utilities flat, staples flat, discretionaries, healthcare, and communications and industrials also flat, and materials coming down over 65 basis points. So it's kind of like a split market right now. We're seeing a lot of momentum towards the energy sector, and financials because of the 10-year yields. I also have Bitcoin. I've actually hidden that, so let me just bring Bitcoin up. So Bitcoin is going to be the white line you guys see on the chart, so it's pretty much flat here. So how can we get this chart with all the sectors? You can get it through our Patreon. I've shared all the links to our TradingView charts, so you will be able to access these live, and they'll update automatically every time I make changes. So the link for this chart has been posted for all of our Patreon members. You can access that over there. All right, so bought Facebook at 323 yesterday. So Facebook at 329 today, so that's good. Pushing higher, but it was a small position for me. So starting a very small position, I'll consider the dollar cost average at 315, even as low as $300. Just that new all-time highs soon. Yes, watching $800 first. That needs to break for Tesla to at least get a retest of 880 to as high as $900. So waiting anxiously for Tesla to break out over that level. But overall, the market's pretty good. Southwest, Walgreens pulling back a little bit after yesterday, and we got Fiverr down over 1.75, so down to 174, breaking below $181. So next support level to watch is going to be 153 for Fiverr. So all right, let's take a look at DraftKings. So DraftKings just consolidating sideways. After the sell-off that we've seen, they put a really significant bid to buy Entain for $20 billion. The market priced that in aggressively with a sell-off of over 7% for DraftKings. Watching 44.50 as that next support level. A lot of charts you'll notice that they are unchanged. They're just DraftKings is consolidating, resistance 55.50, support 44.50. So there's not really much going on except for a lot of consolidation sideways for the company. Let's take a look at SoFi. I actually didn't check out SoFi where it was yesterday. So SoFi is still trading in this uptrending pattern, right? So we're still, actually SoFi did a really good job kind of holding up yesterday. It was only down 2%. That's impressive. And this is still the higher high and higher low pattern. So you'll notice perfectly, we sold off, we pushed up, sold off, pushed up. Right now we're down. And this right here could be that next move to the upside. And that next resistance back up to over $19 a share. So watching that 50 EMA very closely, that yellow line you guys see on the chart sitting exactly at $16 a share. Resistance is going to be $16.65 all the way to that $17.80. So those right there are going to be the two resistance levels to watch for SoFi. So yes, PubMatic is a stock that's also on the watch list. It's up over 2% today. So yesterday PubMatic sold off quite a bit, right? Yesterday was down over 8%. Oof. Strong sell-off for PubMatic. And this is also a profitable company, high growth, that's growing its revenue quite a bit, advertising space, great balance sheet as well, but the valuation is rich for the company, right? Valuation remains rich. And I think we do have PubMatic on this list as well. So again, this is going to be the valuation spreadsheet or tracker spreadsheet that I've created for all of our members, and we'll continue to kind of monitor this. Yeah, I don't know why it's not, why it needs some updating here. But yeah, we'll consider to kind of monitor the valuation for this and also add PubMatic. PubMatic is on this list, so we'll add the valuation for this company, which remains rich. Right now it's trading at roughly, I believe, close to 50 times forward earnings, right? So 50 times forward earnings is still rich for the company. But we'll continue to kind of see if there's opportunity in the stock because it's down so much from its all-time highs. So the risk-reward ratio is very attractive at these prices. We're down a little bit over 68%. Have you decided on the banking stock to look at yet? Not yet. Just waiting on the employment report and the tapering measures from the Fed in November, and that's when I'm going to start to position into one of the banking stocks, financial stocks, to take advantage of that. But right now, JP Morgan, let's take a quick look. We've just been trading sideways for the most part. We did come down to lows of 146, up over 15% from those highs. And this is like a resistance that we're testing right now at close to $168, $167 a share. Just getting rejected here in the past. Then we sold off, quite a bit, 11%. Right now we're just retesting that level. Thoughts on Path? Let's take a look. So UiPath up over 2.7% today. Yesterday it was down quite a bit, 1.5%, but it was down intraday a lot. Before the buyers stepped in, right? So $153 now is going to be some type of a, actually let me just read this chart all together, and this right here is going to be a support at close to $50. This also trades at a rich valuation, so there is going to be risk fundamentally, but technically speaking, it's got some bullish divergence here, some positive divergence forming, and of course it's down quite a bit from its all-time highs. So resistance at that 50 EMA is roughly at $58, all the way as high as 66, support at $50 a share for the company. So there we go. NASDAQ now up over 83 basis points. You got the SPY, S&P up over 64, and the Dow Jones pushing up over 177 points. And as a result, a lot of stocks. Look at Tesla, 796, Alibaba at 141. Apple's still struggling a little bit, but Amazon up over 1.27%. So seeing a little bit of momentum here to the upside. Yeah, Cathy Wood does have path, but it's just too overvalued for me. So all right, China finally green. We got NIO up over 2% here, back up to over $34. Xpeng, Li Auto also up over 2.93% each respectively. Alibaba, like I said, up over 1.4%. We got Tencent also up. JD.com up over 2.6%. So definitely pushing higher. So Glenn, when I'm talking about the percentage cash that I set aside, that's strictly for investment purposes only. That's in the portfolio as cash that can be invested in the markets. Not talking about like any personal savings or emergency funds or anything else. Strictly just the portfolio cash that is there to be invested. Sunrag, I was late to opt out from Investor Early Bird. Anyway, I can still join the community. It says hold up. Yes, so you can still join. Again, we're on like a case-by-case basis. If you wish to join the Investor Early Bird or like the Patreon in general, just message me and I will open up a spot for you, because it's only very limited spots. I would like to keep it at a certain number so that I can actually respond to everyone on a day-to-day basis and actually connect with you on a one-on-one basis, because the more people we have, the harder it gets for me to kind of reach out to everyone, right? So it's going to be very limited people, but yeah, just reach out to me and we'll see if we can open up a spot for you. All right, let's take a look at Logitech, LOGI. Logitech, I don't think I've ever looked at this company yet, but it has been selling off. Actually, may have looked at this once because we do have some analysis, but we are down over 38%. Let's see. Wow, strong revenue growth in 2020 for Logitech. So 14 times earnings, 2 times sales, we got 12 times cash flow, so very, very undervalued. Balance sheet, quick take on that. So cash, wow, very low debt, only 35 million debt versus cash over 1.5 billion. Ooh, this is interesting. Shares outstanding from 168, actually let's just go to annual. Wow, from 2014 this company has not yet issued shares, from 164 million to 168, only 4 million share dilution. Wow, who mentioned this? Flex, shout out to you. We're gonna take a look at this company in more detail. I think the one thing that's gonna top it off if we have a yield on this stock. So 1% yield. It's not the best, but it's decent for Logitech. So I like this. I mean, this is actually not bad. We saw a nice rally, 345%. Now we're down over 60%. I wonder why we are coming down. Maybe the year-over-year comparables are not as good, but definitely I'll add this stock to the watch list to see if there's any opportunity, because honestly it's hard to kind of find stocks that are trading at low valuations in this market, because every time I have to kind of start with the valuation's rich and then we have super high earnings, price to earnings, price to sales, price to cash flow ratios, and we got one right here that's trading at a very low valuation with strong revenue growth and margins and profitable company with a great balance sheet and no dilution. That's something going to pique my interest. So we'll keep a close eye on Logitech. Thanks for mentioning this. Let's see. Been on it for 2 months now. It's definitely worth it. Josh, thank you. I really appreciate that. Happy to have you on board. So, all right. Thank you. We'll message you. Perfect. Let's take a look at TER. That is going to be Teradyne. Teradyne is also a stock that's on the watch list here. So you'll notice that we definitely broke down here from the symmetrical triangle. And right now we're testing some type of a support at close to this level at $108 a share. So $108 is going to be that next support level to watch for Teradyne. And this right here was kind of like a symmetrical triangle. We were just going back and forth. We did break down, got up, got rejected at that resistance. Yeah, I don't know why Logitech may have some downgrades, but I'll take a look at that stock closely. But this right here, 123 was a resistance, and we broke down even further from $115. That was also a resistance there. And right now we're testing some type of a support for the company. Revenue growth, profitable company, so EPS is good. 21 times earnings, 6 times sales. Man, you guys are good. You guys are good. So balance sheet, let's take a quick look. So cash to debt, really good. Total assets are over total liabilities, so that's also incredible. EBITDA growth has been there quarter over quarter annually, 349 to over 1 billion, so perfect check there. Diluted EPS 37 cents to $4.28. That's good. Let's take a look at 216 million to 166 million. Oof, that's also good. This has been our watch list for a swing trade, but fundamentally, definitely makes sense. Makes a lot of sense for us to look into this one because it meets sort of like our screening checks here. You'll notice that from January 2019 we're up over 400%, and recently we're seeing a lot of weakness. That's what I want to see. I want to see stocks that are down 20 to 29% because of nothing, right? And these stocks may be like super boring, because Teradyne, it's like it's not talked about a lot, but this is also similar to Logitech, low dilution, great balance sheet, strong revenue growth, higher margins. And down about 20, 25, 30% from their all-time highs. So we'll keep it on the watch, and I'll do some more analysis on this company as well. Let's see. All right, let's see what other stocks can we look at. AMED. So AMED has just been selling off quite a bit. Is this? Let me see. So healthcare services operates through following business segments: home health and personal care. The home health segment delivers services in the homes individuals who may be recovering from illness. All right, so let's see. Revenues, decent, 1.5 billion to 2 billion. Decent growth from the last 3 years. 19 times earnings, 2 times sales. Cash flow at 15 times. Not bad. The balance sheet is not the best, but it's also not the worst, with total assets more than total liabilities, almost twice, more than twice, but cash is only 92 million versus debt of 283 million. And then we got 33 million to 32 million, so low dilution for the company as well. I might have to take a look at this company and why it's actually down so much from their all-time highs. Down about 56%. That's a pretty steep drop for the company. But it also kind of makes sense, because if I'm thinking about the valuation here at 19, 50% drop means that it was trading at one point over 38 times earnings and over 4 times sales and over 30 times cash flow. So this valuation, you have to understand that this valuation is after that 50% drop, right? So before that, it was at a very rich valuation to begin with, and that was also before 3 earnings calls, right? And this was before, like, in January and February. So we're talking 38, almost 40 times price to earnings and over 40 times price to sales, with 3 less earnings or fundamentals, which have improved, right, year over year. They've actually gone up. So that's why it makes sense why this stock is down. But this is also going to be on the watch list for some more analysis. So we actually did find some quality stocks here today that we can look into: Logitech, AMED, and the last one was Teradyne, that we can do some more research on, and we'll consider to kind of share our analysis and why they're down. Let's see, Micron also is down. So Marco, in which scenario will the US 10-year yields react well to the Fed announcement of tomorrow, and as a consequence will the Nasdaq go up? Well, the only scenario I see for the 10-year yields to not react the way that I expect them to is if the employment report comes out to be very, very poor this Friday, right? If we end up doing only 100,000, 150,000, if it's that poor jobs report, then the Fed may think, okay, so we need some more months to really, really see that economic progress, economic recovery take place, and jobs also to come back into the marketplace. Right now, if the jobs report is very poor, 100,000, 150,000, they may hold off on tapering. And if they hold off on tapering, that means they're going to still consistently buy $120 billion worth of bonds, and that is artificially, once again, holding down rates, right? Because the Fed is pumping all this money into the mortgage-backed securities and U.S. Treasury yields, and as a result, the rates stay down. But if they begin tapering, that's when they pull back on that quantitative easing, and the 10-year yields could react to that. So, Aaron, Cathy, do you agree with Cathy Wood saying growth stocks have basically been in a bear market since February and are about to come out of it? Not fully do agree with that statement, because let's just do some quick plotting here. Let's just do ARKK with Dow Jones. So let's see if we do get this. All right, so right here, let's just go over to the weekly chart. Okay, so this is good. So this is a good analysis. I don't expect them. Actually, you know what? it really depends on what you define as growth stocks to be, right? For me, growth stocks are anything that revenue growth is substantially higher than the industry average, and they're growing at 20, 30, 40, 50%. I also do consider big tech to be in that growth sector because they're still growing revenues at north of 25, 30%. So it really depends what your definition is of growth. To me, I do think that Kathy Wood's statement about hyper growth is correct. Like hyper growth stocks, and we're talking Square, Roku, we're talking all those different companies that she decides to invest in are still somewhat down from their all-time highs. And this is a great example of that. What I've done here is I've taken ARKK, that's the ARK regular ETF, right? That's the flagship ETF for her, divided by the Dow Jones, which is more value, right? Even better, what we can do is we can take the value ETF itself, which is IWD, I believe. So that's going to be the value ETF. So ARKK divided by IWD. Let's just do that. And let's see what the results are. It's going to be somewhat similar to what we just did. So there we go. It's almost a similar pattern, right? So Venkat, yeah, so the power just went out, so I do apologize. It's the UPS, it's the generator that I have on backup. But this right here is going to be ARK Invest flagship ETF relative to the value ETF that we have, that's IWD. And you'll notice since November, October 2019, this ETF has handsomely performed the value, right? 236% jump here. But what does this mean? I want you guys to answer this. What does this 42% drawdown mean relative, like what does it mean for ARK Invest relative to value? What does that mean? Because we've gone over this chart several times and I've explained what does actually mean when this is going up versus when this is coming down. So I want you guys to answer what you guys think happened during this time. February till May. So let me know in the live chat what you guys think. The ARK went down and value went up. So that's right. When this chart is coming down, that means ARK Invest underperformed, right? Underperformed relative to value. So this could also mean that growth stocks went up. That means ARK Invest stocks may have gone up, but value stocks went up more. But what happened over here, right? This right here was another 31% jump. So in the months of May till July, we saw a very similar pattern that ARK once again outperformed value for this brief moment, for this couple months over here, but not as aggressively as what we have seen in the past. So they were not anywhere close to all-time highs again. And now we're seeing that pattern play out again as ARK sells off, as growth sells off, as hyper growth stocks are coming down once again. It's down over 18%. So we're seeing a lot of consolidation here, but we have seen a lot of outperformance, a lot of underperformance, then a little bit of outperformance, and now we're just seeing some consolidation here. So I think it's fair to say that hyper growth stocks are still down from their all-time highs, especially the ones that are in the ARK ETF. But when you compare big tech, I think that is still handsomely outperformed value, because you'll notice that we're almost at all-time highs again. So this right here was the actual outperformance for the NASDAQ relative to the value sector, which is almost back at all-time highs. And now it's just recently started to pull back. So it really depends on what you refer growth as, whether growth is like, super overvalued, high valuation multiple stocks that are trading at a rich valuation, growing at a very, very rapid rate, 100%, 200%, 300% year over year. I like to consider like conservative growth, which is more big tech related also. They're trading at a reasonable valuation. I do think there's much better margin for risk, margin for safety in those stocks. Yes, FNGU is the one. If you could go back to March 2020, and if you could only take one trade, if you go back to March 2020, and if you could only take one trade, what trade would you take? This is actually a really good trivia question. If you go back in time to the sell-off, like at the low point here, and if you could only take one trade, what would it be? FNGU has rallied over 1,800%. It's actually more than Tesla as well. I think Tesla's not rallied this much. So Kid says Bitcoin, Nicholas says Google, Amazon, all in CELH. Let's take a quick look. So CELH. Wow. This has to be a winner from $3, 3,000% gain. Celsius Holdings. Wow, this is incredible. I mean, Tesla. Let's take a look. How much did Tesla go up from lows of the pandemic? From $69 I mean, it was up a good 1100%. 1100%, right? But Celsius up over 3000%. That is incredible. Max says Novavax. Over 3500. So right now, just pulling back a little bit, but wow. This is January 2020. Wow, 9,000% for this company. Incredible. From lows of about $3 all the way to highs of $342. That is incredible. Almost a 10,000% gain. Wow. Incredible momentum here on a lot of stocks. But yeah, you know, that was a quick breakdown on tech and growth, and you know, sort of like value versus growth. But right now, so far, the market's just looking green. Nasdaq getting bought up here. Yeah, Tesla has a split last year, and that's considering the split. It's taking into account the split for Tesla. So some investors are speculating that GME could hit $100,000 plus if mother of all short squeezes takes place. What are your thoughts on the high price could go? Really depends on the valuation. I mean, for $100,000 for GME, the valuation would be insanely high. I think I read somewhere that, you know, if you were to do the math, shares outstanding and everything in place, you know, it could be like more than the US GDP or something, like over $20 trillion, something like that. I'm not fully sure, but it's not possible. I mean, you can't have a stock go up. I mean, like in theory, it could happen. Like on paper, it could happen, but in real application, you know, chances is close to nothing for that to happen. It would be like absolutely insane. It would be crazy for a stock to go up that high. It could certainly go up to like 100, maybe like, or we're talking about GME right now, right? Not about AMC. So GME, it's possible for it to go to 1,000, right? It's very much possible if an insane short squeeze takes place. Possible to go for 500 or 1,000. It could, you know, who knows? But this is also a very volatile stock, right? So I would obviously not my cup of tea, but I know that a lot of people are interested in these stocks. All right, so I'm gonna probably end it there. I think this is a good place to end it. Thank you so much for joining in. I really do appreciate you guys' support. I always do. Make sure that you drop a like if you have just joined, or if you haven't already, subscribe if you're new. We talk a lot about 3 things on the channel, always: fundamental analysis, technical analysis, and macroeconomics. You will always see the analysis on those 3 topics here. Those are the 3 disciplines that we cover from a more holistic standpoint. But of course, our Patreon is also open right now. We will be opening up some spots for everyone who wants to join, get access to our buy and sell alerts, get access to our market updates, private live streams, and my trading view charts as well. But if you'd like to learn more about fundamental analysis and get access to that Excel spreadsheet, we recently also launched a fundamental analysis course where we are giving a 25% discount if you do decide to join, and you will be able to learn everything from start to finish on valuations, on fundamental analysis, and forecasting models as well. So everything will be covered in those lectures, and of course you'll get access to all future lectures as well. So thank you so much for being here. I really do appreciate it. Tomorrow again we'll do another market open live stream. The market's handsomely up today, so there goes power once again, but overall just a nice move in the Nasdaq, the S&P, and the Dow. So hope you guys have a great green day. Take care, happy investing, and I'll see you guys in the next live stream. Cheers.